Normally, people and firms are able to earn interest income from their bank deposits. But imagine if banks charged you for storing money with them. The idea behind negative interest rates policy is simple. Banks will be charged for hoarding cash with the central bank, and people will pay banks to deposit cash. And if people borrow money, banks pay people to do so. This is not fiction, but indeed has been a reality for Europe and Japan for many years. They have made efforts to prevent further drawbacks from the 2008 financial crisis. We invited 3 economists from the financial sector to address several key questions. Why have some central banks adopted negative interest rates?
The central banks are just trying to do their best. So if you talk about the pros, is that they're actually trying to stimulate the economy. Individuals won't get negative interest rate. Corporates won't get negative interest rate. Negative interest rate is something the central bank gives to commercial banks, but it's be like minus 0.1 or minus 0.2%. That's all. So what the lenders will finally get is a price that first is a negative interest rate, second is a default rate, and third is the profit that the commercial bank will take. So finally they will get like 2 or 3% or even 4%, but that's lower than the level that they will get in the old circumstance. So, for example, you have a potential investment opportunity that might return you with like 4%. In the past, when you get a lending rate of 5%, you definitely say no to this opportunity because it's just return you nothing. But when you have like 2% lending rate and you have this potential return which is 4%, you will be willing to invest. So that's actually just making people more willing to invest. So, but it can't be too much below the zero. You can't go to like minus 2%, minus 3%. It's impossible because otherwise people would just get the cash and store them in an underground safe.
And the thought here is that by lending these surplus reserves back to the market again, the velocity of money will increase and it'll benefit the economy, create some inflation. But as we've seen historically, it hasn't really quite worked out that way, and there's no guarantee it could even work out that way now. Looking at examples such as Norway, looking at examples of Japan, where it hasn't really stimulated inflation, nor has it really increased the velocity of money. History suggests that it's not a viable policy to stimulate economies. It probably will cause more damage.
Such an unconventional toolkit came under the spotlight again as the global economy is taking a severe hit from the COVID-19 pandemic and stepping into the worst downturn since the Great Depression. Since the outbreak, the Bank of England has slashed its main rate to a record low of 0.1%. The U.S. Federal Reserve in March made an emergency move to drop its benchmark interest rate to 0 and launched a new round of quantitative easing. Why are many central banks still considering this policy?
You can't really say the negative interest rate didn't work out. The only thing is that 2008 was too heavy a financial loss that can't just be saved by a low interest rate. So when you talk about the situation in 2020 with the coronavirus, it's again the case. I mean, central banks are just trying to do everything they can, but it doesn't mean that after they have done everything they can, they will be able to save the economy.
I think there's not so many choices left for the central bank. As we said, their policy tools probably to some extent are exhausted. They also have to come out more like some gesture of the interest rate cuts.
And is it necessary for the U.S. to conduct negative interest rates?
I feel strongly we should have negative rates. I disagree with them on one thing now, and that's negative rates.
The committee's view on negative rates really has not changed. This is not something that we're looking at.
Well, I think in the United States, it is actually quite necessary for them to adopt whatever they have got. 6 months ago, it was not necessary because the economy was pretty strong. But no one actually expected the United States would be like what we are seeing today under the pressure of the coronavirus.
I think there's sufficient ammunition left in that policy chest. Look, they can just continue to print money in this environment, supporting the debt loads, in other words, going deeper into QE. And this is something that they'll probably continue to do. But we also have to remember in this environment, a lot of these moves by the central banks are really predicated on a quick recovery.
Of course, we cannot say there's no policy tools for monetary policy, and I think at the same time, for the fiscal policy, is more direct, and also could probably boost the economy in a more like a faster pace.
So is it possible for China to carry out negative interest rates?
It is not necessary for China to do that. When the economy is actually back online, you actually reserve the blitz for the next economic crisis. And the PMI is rising above 50. People are confident about the economy. It is not necessary at all for the PBOC to do anything that the Fed should be doing right now. It's a lot of things that U.S. should learn from China's experience of fighting against the coronavirus.
And also, I think that for the PBOC and also have other tools in China, it's very effective. Is RR cut, and also besides that, we also should mention the lending facility in China. Recently, also announced like a lending facility, like a 400 billion for the SMEs.
They're actually benefiting from that because they're picking up a lot of capital inflows, and their economy's rebounding quite quickly. So in other words, the bond markets are doing very well. They're not having to panic by reducing interest rates dramatically. Global markets are very much mapping to China's policies right now.